Good morning, everyone. All of you that are present in watching us in YouTube channel in TCU. This is the International Public Account Seminar that started yesterday and we finish tomorrow. A moment that we will talk about critical issues, looking for the modernization of the public finances in Brazil. I'm Wesley Vaz. I work at TCU in the Fiscalization Secretariat. I'm very happy to moderate this panel that will deal a very found topic of us important for us in Brazil. And we'll try to mirror in very well succeeded experiences in other countries. But I would like to make a summary for what happened yesterday. Yesterday we had the opening ceremony. We had first the opening ceremony with Bruno Dantas, the president of the TCU. They exposed very clearly the importance of this topic to advance of the public policies in the country. So in the morning were discussed a proposal for the new code of financial public finances and the consequences that would happen if we don't do within in a planned way, and the need of to rethink the laws of the public finances. In the afternoon, we discussed with several actors of the executive branch. It was led by Rodrigo Paixão. We talked about the impact of the new control of accounts in the financial process and the fiscalization process of the public bodies. And we ended up the day this way with all very good conclusions on around this topic. Today we start off talking specifically on the integrity model of payments for the federal government of the USA. We are very honored to have them here, public workers with very good success in the American environment, which have been available to present us their successes. And there we'll talk about how the undue payments we can avoid them, and how they have done that, and in how they can interact with the several levels of government in connection with the American public politics. I will moderate this panel, and I will start just warning that in this in this first panel I introduce my first speaker. She will talk in English, and then in the second part we will have the presentation and debate in Portuguese. For this reason, I apologize for these technical issues. We will make a brief introduction of our speaker in English for all of you. One more time, thank you very much for your for being here. I hope that we have a very productive morning and that we get a lot from experience of our colleagues that are here with us.
Welcome. Thank you very much for your presence here. Are you listening me perfectly? Okay.
Yes, Wesley. Can you hear me?
Yeah. Thank you.
I'm ready.
So I'm just to talk a little bit about Barry. Barry is the managing director of the financial management and assurance team within the Government Accountability Office in the US. Barry has over 30 years of experience in auditing, financial management, and accounting in both the public and private sector. She previously served as Vice President, Standards and Guidance for the Institute of Internal Auditors in the US. So Barry earned a master's degree in business administration with a concentration in accounting from the University of Florida and bachelor's degree in economics from Emory University. She's also is a certified public accountant, certified internal auditor, certified government financial manager, and a certified government auditing professional. So the word is on you, Barry. Thank you very much for your presence, your presentation. It's an honor to us to receive those. So we have the word. The microphone, please.
Thank you, Wesley. Thank you so much. It really is an honor for me to be here today with you and your colleagues. Do we have the presentation up on the screen? I cannot see it. Okay. Great. Okay. Wonderful. Thank you. Go ahead to the next slide, please. The presentation, of course, is about payment integrity and improper payments and the work that we have done at the U.S. Government Accountability Office. And the first screen that I wanted to share with you, the next screen after this one. If you could move to the next screen.
Sorry, Barry, I have some technical issues. Just
Okay.
30 seconds, please. Next slide, please, Joseph. I'm sorry. Virginia?
I think there is an issue with the presentation. We are trying to move on, but we can't. Okay.
Yes.
We are here.
Very good. Thank you. Thank you. So I wanted to begin the presentation by talking to you about the federal institutions that are involved in payment integrity in the United States. The first one I refer to is the Office of Management and Budget. They are the largest component of the Executive Office of the President, and they have responsibilities there for the management of the other executive departments and agencies. And of course, one of their responsibilities is to ensure that improper payments are reduced or kept to a minimum. The second agency that is a key player in payment integrity is the U.S. Department of the Treasury. Most of the money in the United States flows in and out of this department. So of course, they have a dedicated interest in preventing improper payments. The third group, and I'll call it a group of individuals who have responsibilities relative to payment integrity, are the offices of inspectors general. Now, these are the auditors within each of the departments. They are a higher level than what you would normally refer to as an internal auditor. They are considered a higher level because they do financial audits. And these individuals also have a responsibility to do audits and investigations relating to the programs and operations within each of their departments. Say, for example, the Department of Commerce or the Department of Defense. Each of those departments has an inspector general with those responsibilities. Next slide, please. So let's define improper payments. Actually, improper payments are the opposite of payment integrity. There was an act in 2019, it's called the Payment Integrity Information Act. It was actually a consolidation of a number of pieces of previous legislation that all came together in 2019 into this one act. But this act now defines improper payment as any payment that should not have been made or that was made in an incorrect amount. So this could include a payment that was made to someone who was ineligible to receive it. They weren't entitled to it. They shouldn't have received it as a beneficiary. It could be something that was paid to a contractor, but the contractor was not entitled to it because they did not provide that good or service. It also could include a duplicate payment. I wanted to point out too that OMB also instructs the agencies to treat payments that are insufficient in documentation as improper payments. And that means that if there was a payment made and there's no supporting documentation or not adequate supporting documentation, that particular payment is also considered to be an improper payment. And then finally, if you look in the box at the bottom, you can see that improper payments and fraud are not one and the same. Rebecca may talk about this a little bit when she makes her presentation. All fraud that involves a federal payment is considered an improper payment. However, not all improper payments are fraud. There may be improper payments that were inadvertent or unintentional, so those may not be considered fraud. Next slide, please. Let me talk a little bit about the Payment Integrity Information Act. The Act requires all programs and activities within the federal government to identify those that might be considered susceptible to significant improper payments. And there's a schedule, it lays out what is considered susceptible. There's a formula, so to speak, of what is considered susceptible to significant improper payments. Once an agency has determined that it is risk susceptible, then it has to go to the next step to develop an improper payment estimate for those programs. And then the agency has to look at the root causes for those improper payments in those programs and try to develop some corrective action plans. Finally, they report out on the results of their estimation and their causes of improper payments and their corrective action plans. And then the last item here, number 5, is that inspectors general must annually report on their agency's compliance with improper payments legislation. Remember, I pointed them out in an earlier slide as being one of the 3 key agencies or components of payment integrity. Now, to assist in this process, OMB issues implementing guidance. Next slide, please. So I will tell you a little bit about the risk assessments. Properly executed risk assessments are really the cornerstone of government-wide efforts to estimate and reduce improper payments. OMB guidance directs agencies to consider a number of factors that may impact the level of improper payments within their respective programs and activities. And some of the things that they ask you to consider are, for example, how long the program has been in existence, how complex the program is, what is the volume of payments made through the program, dollar amounts. One would assume that the larger the volume of payments or the larger the dollar amounts, the higher risk level you would see in that particular program. When payments or eligibility decisions are made outside of the agency, that's another factor too, if the agency doesn't have complete control over the decisions relating to those payments. Now, we have done a number of reports in this area. One that I wanted to point out was done in 2019. It talks about a lack of sufficient documentation in some agencies to actually be able to support their risk determinations. And we also found that agencies were not performing risk assessments once every 3 years as they are required to by law. Next slide, please. After the risk assessment, are you at risk? After that assessment, the agency is required to estimate improper payments. And the purpose of this is to figure out what the magnitude is and what corrective action plans they need to address them. Now, OMB has stated that in their guidance that estimates must be statistically valid. We've also done some work in this area, and we've noted inconsistencies in how agencies are estimating their improper payments. Some agencies, for example, are not considering eligibility, which is absolutely key. If you're looking at improper payments, you need to know whether the recipients were eligible to receive those amounts. Another cause is insufficient documentation. That is part of the estimate, as I mentioned earlier. That has to be included in your estimate of your improper payments, those payments that do not have sufficient documentation. Next slide, please. Of course, the next and one of the most important actions or activities is to identify the root causes and then set up some corrective action plans. Now, OMB has provided some guidance here, some starting points for agencies to figure out what their root causes are. For example, there may be a failure on the part of the agency officials to actually access the data or information that they needed. It may be a situation where the information or the data doesn't even exist. But determining the root cause is really critical to developing your action plan, and then, developing those internal controls that are needed to prevent improper payments from occurring in the first place. Again, we've done work here. I refer to a report in 2020 where we learned that agencies did not establish planned completion dates for their corrective action plans. And we also made a number of recommendations here, including that agencies should develop annual benchmarks so that they can demonstrate the progress of their plans, as well as the impact that those plans may have in actually reducing improper payments. Next slide, please. Improper payments affects the financial statement audits, and I wanted to let you know that at the U.S. Government Accountability Office, we do an audit annually of the U.S. government's consolidated financial statements. Since 1997, we have determined that the federal government has a material weakness or a deficiency in internal controls as a result of improper payments. The reason for this is that the federal government is really not able to determine the full extent to which improper payments occur. In other words, the government can't really get its hands around the actual number of improper payments. They don't really know the full amount. And they also don't have reasonable assurance that there are appropriate actions being taken to reduce improper payments. Next slide, please. I wanted to share with you on this slide the cumulative summary of improper payment estimates in the federal government. If you look at the graph on the right, you can see that since 2003, the total number has been $2.2 trillion. That's a lot of money in the US. I don't know how it converts to your currency, but it is a lot of money. I will make a point that there are 86 different programs in 16 different agencies. Every agency has multiple programs. So 86 programs in 16 agencies that reported last year, fiscal year 2021, the most recent year that we have on record. They reported $281 billion. Now that amount may not make a lot of information, provide a lot of information to you, but I can share with you that that amount is $75 billion from the estimate the year before. So what that means is that there was a 36% increase over the prior year's estimate in the amount of improper payments. And I also want to point out that improper payments can be due to underpayments as well as overpayments, although most of the improper payments are due to overpayments. Want to mention too that the COVID-19 pandemic brought a lot of recovery money into the businesses and distributed to individuals within the US, but the programs related to that, most of them were not developing estimates of improper payments. So the number of 281 billion probably is a lot higher, a lot larger. Last point I'll make is that the law requires agencies to keep their rates of improper payments. That means the improper payment amount as a percentage of the outlays for that particular service or good or distribution. They require that that rate be 10% or less, but we had 26 programs that were above that rate. Next slide, please. This is just simply a summary of, for your reference, of the amount of money that went out for COVID relief and recovery, $4.6 trillion in the US. There was some other legislation that has been passed since then, not specific to the pandemic, but which could have the effect of assisting in pandemic recovery. Next slide, please. COVID funding, as I mentioned, was not included in most estimates of improper payments, and the fraud risks there really were pretty significant as reported by some of our inspectors general. And because of that, there was an effect on the financial statement reporting. So I've given you here a couple of examples. In the Department of Labor, the Inspector General, the OIG, Office of Inspector General, reported that about $5.4 billion in potentially fraudulent unemployment benefits were paid out. Unemployment insurance benefits are those that are paid to individuals because they could not work during the pandemic. And as a result of that, the Department of Labor was able to get a clean opinion. They ended up receiving a qualified opinion on their consolidated financial statement report last year. Another agency that also had a problem was the Small Business Administration. Their Inspector General reported that last year there were over 70,000 loans totaling about $4.6 billion in potentially fraudulent loans. And that means that, that there was a lack of documentation that was needed for auditability. And as a result, they actually issued a disclaimer of opinion on their 2021 financial statement audit. So let's go to the next slide, please. And this is actually the last slide. I want to sum up on this slide that, when COVID happened, a lot of money went out the door very quickly. So we were lacking some of those front end controls to check before the money went out, was paid to a beneficiary or a contractor. We were lacking documentation or support to make sure that that money was going out properly. But what we've done now in many cases is done back-end controls, doing audits, post-payment reviews to see if we can recover some of that money. This, of course, has impacted the auditability of several agencies' financial statements, and their auditors have not been able to give them what we normally call a clean opinion. But I will just close on this maybe more optimistic note that these challenges are really being recognized within the federal government in all branches throughout the federal government, and we are making improper payments a priority and are really collectively seeking appropriate actions to reduce improper payments. Thank you, Wesley.
Thank you, Barry. It was a brilliant presentation. Just for your information, 2.2 trillion US dollar represents around 10 trillion Brazilian reais here in Brazil. And I'm very, very impressed about the numbers, especially regarding the $5.4 billion in improper payments in Department of Labor. It sounds, a huge amount of money for me at the first moment. So I'd like to thank you very much for your presentation. I would like to, speak a little more with you at the end of this morning. And thank you very much again. Thank you. Now, okay. Agora eu estou passando.
Now we speak in Portuguese. I would like to see if I expect that everybody is with us. Now I'm gonna introduce our next invitee that will talk about the resources of the GEO to the combat of fraud. I would like to invite to talk with us Rebecca, which is the directors of the Forensic Department and the Investigation Service of the GAO. She audits and works to identify frauds, abuses in several governmental problems, including the Internal Revenue Service, which is the Receita Federal Americana, the Homeland Security Department, which is the Ministry of Defense of Justice in the United States, the Transportation and Justice, and others. She has a PhD on the Vanderbilt University, and she's a bachelor in psychology too. Rebecca, please, I pass you the word. Can you hear us, Rebecca?
Wesley, can you see me?
Yeah, perfect. Thank you. Yes.
Wonderful. Thank you so much for that kind introduction. And thank you for the invitation to be here today to share a relatively new and very different kind of product that GAO issued in January of this year. As the National Audit Authority for the US, GAO is usually known for its audits, but this was a non-audit product that we created to help agencies better understand and combat our fraud risks. And we felt this was needed because GAO had issued its fraud risk framework in 2015. And in the framework, we outlined leading practices that agencies should follow to manage fraud risk. So they had that guidance for 7 years now. And then in addition, federal laws had been in place specifically for managing fraud risk since 2016. So the guidance and the legal requirements had been out there for some time. But when we conduct our audits, over the years, 2017, 2018, 2019, and then through the pandemic, we found most agencies were very far behind in implementing the leading practices as required. And we saw some really significant impacts of that with fraud in the pandemic, as Barry just talked about, particularly with the unemployment insurance programs and the small business loan programs. And our audits over the years, they were always on a program by program basis. So we were having this incremental impact, but a more expansive approach was clearly needed here to help move the needle across the government. So we developed this resource as a user-friendly, engaging way to help federal employees better understand fraud and then access resources for combating it. And given the novel nature of the product, I want to give kudos to some other teams that my forensic audit team worked with in developing that. Our applied research and methods team helped us develop many of the things that you're going to see today, and also our innovation lab with the science and technology team helped us with the web platform. And let's see, I am going to share my screen now. So let me do that. Okay. And can you see my screen?
Oh, yes, clearly.
All right. Well, I'm going to start off with maybe the easiest thing today, how to find this resource. I think the quickest way to find it is just type gao.gov into your browser. And then, of course, that takes you to the GAO website, our main public-facing website. And if you scroll all the way down to the bottom of that page, you'll see some quick links here. And we are within this Report and Prevent Fraud button. So click on that. And then we've got a page to report fraud. Public citizens can report suspected fraud through FraudNet. But our anti-fraud resource is this, Prevent Fraud with GAO's anti-fraud resource. And when you click that, that brings you to our landing page. And within the landing page, I'm not sure exactly how you're seeing this on the page, so I'm going to try to reduce it just a little bit. So within the landing page, you will first see a carousel here, and we feature some of our recent My Forensic Audit Team's reports here, but we also have our fraud risk framework that's available for download. And we'll be periodically updating this with new reports as we issue them, so if you're interested in different topics, please check back. And then scrolling down, you will see the 4 main areas that we cover in our resource. And these are the cards that you can use to navigate to the different areas, but you can also use these tabs across the top. So a couple different ways. The first area, and this is a bit of a building block site, for those that are new to fraud, you might want to start out with this page on what is fraud, in which we start to begin to define our conceptual model. We also have a page on how fraud works where we start digging into the conceptual model. We have an anti-fraud resources page and a glossary. Now we'll navigate to that first introductory page. So on this page, we begin the introduction to how we define fraud. And we define fraud according to GAO's Green Book, our standards for internal control in the federal government. And that definition involves obtaining something of value through willful misrepresentation, so a very broad definition. And in order for us to call something fraud, it has to be adjudicated as such through some judicial or other administrative system. And as you know, fraud is a somewhat narrow concept because it requires that adjudication, but there's a broader concept of risk, fraud risk. And it is in the US, the federal agency's responsibility to manage fraud risk. We have a little bit here on why this matters and why folks should care about it. And I will note that, and I'll talk a little bit more about this later, but it is beyond just the financial impact that fraud can have. Given the scope of the benefits and programs that the federal government provides, there are many impacts such as environmental, health and safety, national security, infrastructure impacts that fraud can have. So much more than just a financial loss that we're thinking about here. Now, scrolling down, we begin to get into our conceptual model, and this is a very high-level overview that we'll get into more as we continue through the pages. But at a very high level, when we did our review of over 200 federal, criminal, and civil cases, we found that all federal fraud schemes involved 5 key characteristics. They all have an affected federal program or operation. They all have participants, including the fraudsters and others. They all, sorry, I don't know if you're seeing that. They all have activities. And think about this as the flavor of fraud. This is the fraud activity. And of course, associated with that activity are mechanisms that are used to carry out the fraud. And all fraud schemes have impact. As I mentioned, a broad range of impacts. And can navigate to each of these, and we give a little bit of information and a couple of quick examples. When we're talking about federal programs, what we mean there are the services and benefits delivered, and that's everything from very broad benefits like Medicare or grants programs, social safety net programs, contracts. So all of the essentially services or benefits that a government provides. When we're talking about operations, we're talking about those internal things like time and attendance, travel cards, and other payroll and other internal operations. So the scope, as you can imagine, is very, very broad here. Looking at participants, I mentioned we have the fraudster, but there are also others that can be involved in a fraud scheme, and also sometimes more than one fraudster. Often it's, some individuals working in concert. But there can be knowing facilitators. For example, if there are individuals within the agency, a knowing facilitator could be, someone who's with the agency, and that represents corruption. There could be unknowing facilitators, individuals who are not aware that they are facilitating, and then there could be coerced participants within the fraud scheme. And of course, there's also the victim to the fraud scheme. Moving on to activities, as I mentioned, this is the fraud activity. This is the flavor of fraud, and there are often various types of frauds that are used to perpetrate a scheme. And we just list a couple here from our model. And then very closely tied to the fraud activity is the mechanism. This is how that fraud activity was carried out. And again, just a quick sample of a few here, document falsification, social engineering, cybercrime. And again, there can be multiple types of mechanisms used for any type of fraud scheme. And then lastly, we have a little blurb on impacts, and we highlight a couple of those impacts beyond just the financial impact. So that is an introduction to our conceptual model. Moving on to how fraud works, on this webpage, we begin to really dig into the conceptual model. And for those of you who are maybe more sophisticated users or knowledgeable about fraud, you might find this first section particularly useful. Our conceptual model that you see on this website, it is a visual representation of an ontology. There is a much richer, broader, deeper ontology that underlies everything that you will see on this website. And we provide that ontology for download here. You can download that in a variety of formats. If you have Web Protege, you can interact with that. So if you're interested in a deeper dive or using the ontology for your own data analytics, that is available to you for download. But we realized that most people probably aren't quite so interested in that level of depth. So we provide a number of different ways for users to interact with the model. And these are interactive graphics that we've provided. And the first one lets you explore 3 different types of fraud cases. Roll out there so you can see this a little bit better. So we provide a visual representation of a grants case study, a contracts case study, and an identity theft case study. And since Andrew's going to talk about identity verification, I'll quickly highlight this one. So this case study involved a woman who worked at a medical office, and she had access to the PII for all of the patients, and she stole that PII in order to sign up for SNAP benefits in her state. It's a federal program that's administered by the states. It's a food assistance program. And over here, you see, so the affected federal program is the SNAP program benefits. And then the participants on the right-hand side, we've got the fraudster, the one individual woman who stole the PII and applied for the benefits. We have some unknowing facilitators in that. Of course, the state office that provided those benefits unknowingly that they were fraud. And then, of course, the medical facility where she worked and stole the PII. That was an unknowing facilitator. And then, of course, on the other side, we've got some additional participants, including the Department of Agriculture, and then the victims whose PII was stolen, and then also the state-administered program. Below that, we have a couple of examples of some of the fraud activities that were used in this scheme. The identity fraud particularly, and the public assistance fraud, and then just a sample of some of the mechanisms that were used to carry this out: misrepresentation, theft, PII theft, and some others. And then, of course, just a handful of the various impacts. So you can explore a sort of a attenuated visual example of how these fraud schemes are mapped together in the relationships. Another way that you can explore the relationships in the ontology and the conceptual model is through this Sankey diagram. We have selected just a couple of the main key fraud types: healthcare fraud, identity fraud, tax fraud, contract fraud, and grant fraud. And again, a sample of the variety of mechanisms that can be used to carry out those frauds. And one way that might be helpful to you is if you're thinking about, where do we want to spend our time on internal controls? What will give us the biggest bang for the buck? Perhaps you can look here and see eligibility misrepresentation, for example. This is a very common mechanism that's used to carry out different frauds. And as you can see, it's used in healthcare fraud, identity fraud, tax fraud, contract, and grant fraud. And so if you're thinking about investments in internal controls, and you know that eligibility misrepresentation is a key way that your frauds happen, perhaps you want to invest in third-party checks, or make sure you've got corroborating documentation for eligibility representations. Another common way that frauds are perpetrated are through fictitious entities, and that can, lead to various types of identity, tax, contract, and grant fraud. Shell companies, another one that's used in a cross-cutting ways for multiple frauds. So, if this is a mechanism that you see used frequently, you can think about using corporate registry data or Better Business Bureau data. In the US, we've got the System for Award Management that includes all grant and contract recipients. So some kind of third-party data could assist you there. So this is just a way to explore some of those relationships. And then lastly, we have an interactive graphic that lets you drill down on some of the areas within the major characteristics. We have the major characteristic of activity, the fraud activity, that you can explore, mechanisms, and impacts. And I'll just go with mechanisms since we're looking at that a little bit. So if you see an empty circle, that means that that's as far as that characteristic goes. But if it's got a full circle, that means that there's a little bit more you can drill down in. And we'll take a look at misrepresentation. That's kind of the sine qua non of fraud. And as you can see, there are a multitude of misrepresentations of different ways that you can misrepresent things. Document manipulation, we'll look at that. And there are multiple ways that you can manipulate documents. And again, the link with mechanism is important to think about when you're trying to imagine what controls might be useful for you. So, for example, if you've got, issues with altered documentation or forgery or backdating is something that you're seeing in the mechanisms used for certain types of fraud, then perhaps you can do some analysis of the metadata of your documents to check and make sure things haven't been altered. Again, third-party corroboration can be useful to ensure that forged documents are actually accurate. If you have missing documentation or document omissions, perhaps processes to ensure the completeness of your documentation. So again, I think drilling down on the specifics of mechanisms can be very useful in understanding where you might need control enhancements. All right, then moving on to the next page, anti-fraud resources. This is a page where we think most of our agency staff are going to spend their time. And here we provide a wide variety of resources compiled. And we've got all of our fraud schemes that we use to develop the ontology. And if you want to just browse through those, you can do that. We've got fraud awareness resources, prevention and detection guidance. And here we've got things, of course, from the US agencies, but also from international and other agencies, some fraud management principles and GAO reports. But if you have a particular program of interest, to scroll a little bit, you can also do some searching and filtering. Let's say, for example, you are engaged in work that involves contracts. So you can click that button and apply. And that will bring up some resources that are more tailored to the contract environment. And if you click on that case example, we give a little blurb of each case. And also we tag it to some of the characteristics in the conceptual model and show some of the definitions. And we do that for all of the cases in here. And then, of course, we have some, somewhat tailored resources for you to examine. We also have a glossary, and the glossary includes all of the definitions across the website and included in the ontology. So if you're interested in a very extensive compendium of fraud terms in a glossary, this is a great place to search. If you're looking for something specific, you can just type that in, and it will bring up that word wherever you see it in the headers, but also in the text. And then lastly, we have the About page, where we have information about how we did our work. We've got a short blurb here about how we did that. But if you're interested in a deeper dive on that, we also have a PDF that covers our full methodology. So you can download that and look at that if you're interested in a little bit more detail. One thing I do want to highlight is that we have a little button down here at the bottom, hopefully you can see that, where you can write us with feedback. We continue to update the website. We continue to update our ontology. We have hundreds of cases now that we have compiled through our work on the pandemic fraud. As the pandemic fraud cases have come through, we've entered those in the ontology, and we are planning at some point to update those and add those to the 200 that are there also. As we do our work and our audits, we also continue to use the ontology and enter new fraud cases for different programs. So continue to check back because we will continue to update the cases and the resources. But also, if there's something that you see here, if you have any questions, you can email us directly at this antifraud@gao.gov. It's a mailbox that we monitor specifically for this resource, and we welcome your exploration of the resource, and I look forward to your questions. Thank you so much.
Thank you, Rebecca. Apresentação impressionante. Eu tenho uma série de
I
questões.
have a series of questions that I hope to make in the end of this morning. Very impressive to see how a work of research together with something that is defined to odontology, to map forms of knowledge to control beyond the jobs of audit. So we will talk about him later. I want to call here to talk about the verification of the identity has the reduction of improper payments under Kurtzman, which is a scientist of senior data of the Lab of Innovation. And the interesting of his job is that he focuses in the development of new approaches to automatize to illustrate what comes next in the next audits. Normally, he works outside of the formal audits, and the process of the audits, together with the audits for many things to work in questions of points has the identification of the ID.
You have the word.
Fantastic. Thank you so much for hosting us and for this event today, and thank you to my colleagues. I'm conscious that our translators have been live translating for 40 minutes straight now, so I will try to slow my cadence after I make points, let you guys catch up. I am sharing my screen now. Can you see my presentation, Wesley?
Oh, yes. Yes.
Fantastic. So I'm going to be talking about a report and a simulation tool that GAO and several of our partners put out just a couple of months ago, focused on key practices to reduce improper payments through identity verification. I mentioned partner agencies. This initiative, which is called the Joint Financial Management Improvement Program, is GAO, so us, working collaboratively with the Office of Management and Budget, the Office of Personnel Management, and the US Department of Treasury. We held an expert panel on identity verification and improper payments in June of 2021, and the report and the simulation tool were published in July of 2022, so still hot off the press. There's a lot in the report. I'm going to focus on considerations at the program level and the 6-step framework discussed in the report. And roughly speaking, this is a guide to the rest of my presentation, which starts with identifying program risks, analyzing the risks, establishing risk tolerances, determining a control strategy, designing and implementing the control strategy, and then sharing data to respond to the risks. All of these topics here are discussed in great depth in the report. I encourage you to read it. We don't yet have a Portuguese translation of the report, although Barry, maybe that's something we should think about. All right, so let's talk about identifying risks. And this may seem straightforward, but we learn from our experts that in fact programs face many subtle risks that program managers often don't consider when they design their controls. So you should always identify and analyze risks before getting to the controls that you build to respond to the risks. In order to identify the risks, start by considering all significant internal and external interactions. Who does your program serve and interact with, including other partners, as well as clients, people that you issue payments to. So I guess the citizens of Brazil, as well as changes to the environment in which your program is operating. So one day you were doing in person, the next day there was COVID-19, and if you did what the US did, you shifted very quickly to primarily virtual interactions, which means new risks. Risks range widely. So for example, a program may inadvertently issue an improper payment to an applicant, just by mistake, or miswriting someone's name. A program may unknowingly disclose an applicant's personally identifiable information. Or the program could be a target of cyber attacks aimed at the program's databases. If in your program, misrepresented identity may create a risk of improper payment, so someone might lie about who they are and essentially steal money from the public, consider the types of misrepresented identity that are associated with the individual's applications for benefits or requests for payment. An example we discuss in the report, database leaks versus sophisticated identity theft. Someone may get a list of names from the internet and try to apply for public benefits as each of those people from the leaked list. They will have superficial information about the individuals whom they claim to be. Or they might engage in sophisticated identity theft, follow someone in detail, have every bit of information about that person, and be able to fully represent themselves as that individual. And this is a bigger risk if there are bigger payments involved. It's worth more investment of time on the part of, for example, a fraudster. So consider which type of identity misrepresentation you face. So the second part of our framework I want to discuss is analyzing risks, which means estimating the significance of risks by considering magnitude of impact, likelihood of occurrence, and the nature of the risk. So in the case of misrepresented identity, you may actually not know how many of these payments that you've issued in the past were improper. You can use historical data to examine the extent to which there are red flag indicators that suggest there may have been improper payments, even if you can't prove it in court. So for example, in the US, fraud is an adjudicated court finding. Essentially, it's something that has to be proven, but you can find indicators and red flags that may help guide your program, even if you are not able to build a case and prosecute an individual. In our report, we discussed unsupervised machine learning models, essentially clustering to find groups of like behavior or similar individuals to analyze in greater detail, essentially to find anomalies for further qualitative analysis. So you can combine sophisticated machine learning methodologies with intuition from your folks who've been working on fraud issues for years, and that will strengthen your knowledge, even if you can't prove fraud. And then the second point we want to make here is to leverage existing shared data. So you may run an agency that collects some data. You may have partners at other agencies that have equally or more useful data that can help you build an understanding of your applicants. So to the extent it's possible to sign memorandums of understanding with partner agencies and share data, it will strengthen your analysis. Sorry, Teams is being a little slow to change slides. Here we go. All right, so now responding to risks. We've identified and analyzed what the risks are. Before we actually build our responses, we still need to decide our tolerance. How many improper payments can we make and still be okay with our operations? Because usually there's a trade-off between stopping improper payments and promptly issuing payments to legitimate applicants. So those choices and trade-offs, making payments quickly, minimizing burden to applicants, and your tolerance for inadvertently flagging fraudsters who are not actually committing fraud, versus inadvertently missing people who are committing fraud. So the trade-off between false positives and false negatives. In designing your responses to controls, consider that you can choose to make your controls uniform or risk-based. Uniform means applying the same controls to every applicant. Risk-based means using a model. So a very simple model might mean more controls for individuals who are requesting larger payments. Or, as we will discuss in our simulation tool, using predictive analytics and other red flags to increase the extent to which applicants who are flagged as higher risk are exposed to more stringent controls. So, for example, an applicant who's flagged as risky might be asked to come in person to your office and do an in-person verification rather than completing the process electronically. More burden on that applicant, but for those not flagged, the burden is minimized. So again, it's trading off the quality of the experience for applicants that are considered less risky with the need to control the program's money. Second, in response to risks, you need to consider scaling and adapting. So for example, in the US, unemployment insurance claims rose from 211,000 per week in 2020 to 6.6 million per week as the pandemic started. And the ability of programs to scale was a great determiner of how successful they were in managing fraud risks according to their normal controls. Data sharing is also, you've heard me mention this before, also important for responding to risks. So for example, especially where data are sparse and the risks associated with misrepresented identity are uncertain, partnering with telecommunications firms may help you to flag risks such as SIM swapping or phone number porting, and identify individuals who appear to be using fraudulent or stolen credentials in their application, which can help to flag them for further steps and controls. All right, so now we've gone through the framework and we're implementing the controls. There are still important considerations, and we discussed these at length in the report, but one I want to highlight for you is the socioeconomic challenges that some individuals face, but others may not. So for example, if you are implementing a system of controls that requires people to use the camera on their phone to verify their face online, some individuals cannot afford expensive phones with nice cameras and will fail the control at a higher rate, or they may not even have phones. You can measure the program's performance to see if some segments of applicants are struggling. So for example, if applicants who come from lower socioeconomic backgrounds are failing to complete the applications at a higher rate. And you can then conduct outreach and offer other verification channels to overcome obstacles for these applicants. So for example, having field offices where people can come in person instead of applying online may help individuals who don't have computers or phones. All right, so as you've seen from this presentation so far, there are a lot of considerations that are interrelated as you design a system of controls. The complexity of this is that a decision in the way you identify risks also affects how you build controls. And because these concepts are interrelated, it is easier to understand them if you can interact with them. So we built a simulation tool. I will pull it up on the website in just a moment. The idea here is that our guidance can be essentially divided up into the sections of our report, and you, as the user of our simulation tool, can make choices within the scope of our report for a hypothetical program. In this case, a program that issues one payment to 1,000 randomly generated applicants each time you run the simulation tool. You can then see the outcome of your choices in terms of improper payments stopped, proper payments inadvertently stopped, administrative costs, and the satisfaction of users of your program. And for those of you who'd like to at home, the URL is gaoinnovations.gov/ID_verification. You can also find the report and the simulation tool on cfo.gov/JFMIP, Joint Financial Management Improvement Program, /payment-integrity-initiative. Let me stop presenting this and switch to the web browser. Wesley, I'm conscious of having only about 3 minutes left, so I will just give a quick tour of the website.
Yeah, but be my guest. Your presentation is awesome. So we have 5 minutes, 2 for me.
Fantastic. All right, let me switch to my browser here. All right, so on the landing page, you will see a introductory video. Questionable looking person in the video. You can ignore him for now. I'm just kidding, that's me. We have a background describing what this tool is and how to use it. A second video that walks you through the simulator interface. So essentially what I'm about to do here, that highlights the portions of the interface and shows you how to use the tool. And then for those of you who are interested, I would recommend starting with the tutorial example, which walks you through specific program configuration choices and shows you the resulting outcomes. So this is essentially hand-holding you through the simulator interface. The main page of interest is, can you improve the hypothetical program's performance? And this is a automatically generating report that shows you the effects of your current configuration choices. To give you an example, this panel on the left shows who is applying to the program, and you can select more or less socioeconomically vulnerable applicants. So in other words, people with fewer means applying to the program. You make your selection, and the simulation will be processed. And just to summarize the concept here, there will be a higher dropout rate with more stringent controls that, for example, require you to take a day off from work to visit an office for applicants who are earning an hourly wage and can't afford to give it up. To learn more about each of these concepts, you can click the link here on the side above each control. And it will take you to a tab that's deeper within the interface that explains the concept of socioeconomic vulnerability as it is described in our report, and then explains the mechanics of our model with respect to the concept. If you're interested, you can click on the data viewer and you can see details about each of the applicants in the simulation run. This is probably too much information for most of you, but if you click the generate narrative logs, you can actually see an automatically generated narrative explaining what each applicant did. So you can discover the path that they followed. So for example, if you're particularly interested in individuals for whom misrepresentation was not caught, simply filter to those where it was not caught, and you can see where the control system broke down. Results page also shows a table breaking down payments issued to applicants in different categories: proper payments made, proper payments stopped or deterred. And you can also see, and this is especially relevant if you configure this to have a multi-tier risk control system, whether the improper applicants as a proportion of the total received or prevented more payments. And we have a table here that shows whether or not there was a differential impact of your control choices based on the socioeconomic vulnerability of the applicants. So in this particular configuration, in fact, it's fairly balanced. So preventing proper payments at about 36 to 39% irrespective of income. So that's a good thing. But you can see that there was a pretty high dissatisfaction rate among applicants. And this is because we've made them, in this, again, particular configuration, hop through more hoops, and their information leaked because there was a hack of the system mid-program length. So for example, we could have configured heightened security for the program and enhanced the security, which will increase satisfaction, but also administrative costs. So that's how this works. That's the 3-second version. You can spend a few hours with it. And if you've got questions about this that are not answered in the accompanying report, you're welcome to email us. The report itself has signs on the side of the margin as you read the report that indicate where a concept is illustrated in our simulator.
Thank you, Andrew. Fantástica apresentação, muito obrigado. Sigo em português aqui. Vamos conversar também no fim da
We
manhã.
will start here in the end of the morning about this presentation. I'm very curious to see how that was built, and especially how was the participation of the manager in this beautiful tool of simulation tool. Now we will talk with co-workers that work in the department of the American department. Also about our general vision, how the use of the data analysis how can be used to combat fraud, and now about the perspective of the public gesture of the audits. So to talk about this perspective of data analysis about improper payment, Sarah.
Speak Streetovich. Ela é diretora.
She's the director of the Center of Excellence of Payments of the American Department, working in the Center of Excellence, Payment Excellency, which basically is a center to promote partnerships of the citizens to prevent insights and recover improper payments due to frauds, waste, or abuse.
The goal of this Excellency Center is to maximize the data usage accessible for the government and to improve the completion and quality of the governmental American departments are using, and to strengthen the partnerships among the governments and among the agencies, also to identify the opportunities of improvements and to prevent in conjunct the improper payments.
Does Sarah? No.
Hello, hi. This is Marshall
Hi,
Henry.
Marshall.
I believe Sarah may be having some technical issues. I'll
Yeah.
be presenting also today.
Oh, great. I will present you right now. No problem. So you are Marshall Henry. Marshall Henry é diretor do Centro Do Not Pay. Também.
He's the director of the Central Do Not Pay and also the American Department of Fiscalization. And he works with Sarah. He will make the presentation with us. And what I think it's interesting in your curriculum is that you've been the manager, the transformation janitor of the financial innovation and transformation of the Treasury Department of the United States. So Marshall Henry, thank you.
Here with us today. So you have the word to perform a presentation. Thank you very much.
And thank you for the introduction. I'll get started. As mentioned, what we hope to present today is the framework of how we set up our integrity program, some of the background on why we made certain decisions, the security that we have in place, and what our vision for the future organization also is. We're going to go through the following points as we do this, and also hit on some important case studies that we have across the US government using our services. The best starting point when talking about payment integrity for the US government is looking at some of the services, specifically financial services, that we have common across the government. The Department of Treasury is centrally located and provides a number of these services for the other agencies in the government. Some of the categories of services that we offer, we have financing, how we offer investment tools to our citizens in order to finance government operations. Last year, we awarded around 20 trillion in Treasury marketable securities. We offer collection services across the government, taking payment from citizens or businesses, depositing it into the Treasury on agencies' behalf. Last year, we collected around 4.9 trillion in revenue for the government. We offer payment services, money going out of the government, either in loans, grants, services. We'll touch on this as this is a key part to payment integrity. I'll offer some more details in the coming slides. We also offer debt management services, citizens that owe debt to the government. We manage that, ultimately collect it. We offer government-wide accounting services across the government, making sure that each government agency is following the same standards and reporting up to the same general ledger. And then we also offer financial shared services across the government. We find government agencies may have different missions, but there's a lot of core activity that they do that is the same across the different agencies. And it's sometimes cost efficient to offer a shared service to accomplish this rather than having each sub-agency take the time and the cost to meet that functionality themselves. This is the starting point for payment integrity, looking at how the money flows through the government, where the touch points are with our customers, and how we manage the position of the government. We've seen a lot of development over the years and a lot of change in the very concept of payment and payment integrity. Looking back over the past 50 years, we've seen a real shift from paper-based, slow, government-focused payments, best represented by a check being sent out from the government, slowly morphing and adopting into more customer-centric, more electronic, and faster payment options. Over this time frame, we've seen the adoption of ACH, automated clearinghouse payments directly from a bank account. We've seen the addition of plastic card or credit card, debit card options. And now we're seeing the ever-emerging field of online and mobile payments. All of these offer great promise for our citizens. They're able to give and receive payments very quickly and efficiently. But you will see it also gives us a new portfolio of risk and of potential improper payments. I wanted to include some slides for scale to let you know of how large the issue is. Then when we talk about payments and we talk about payment integrity, we're dealing with a very large scale in the government. So that is a design consideration for all of our payment integrity activities. In fiscal year 2021, we issued about 1.57 billion payments worth about 4.5 trillion for ACH. The overall amount of payments was around 6.4 trillion. We focus a lot of our effort in identifying payment integrity solutions that can be used across government agencies. We have the need to do one-off solutions for individual businesses, for individual programs, but we want to make sure that we're reaching the vast majority of these payments because we are working at such scale. As such, ACH is a big focus from us, working with banks, financial institutions, making sure that the fraud and stolen identity controls are in place. One more important piece of background that I wanted to include is some of the background on some of the efforts that we have in the past few years. In response to the COVID pandemic, the government set up a number of relief programs for citizens and for businesses. This created a lot of money going out of the government, having to scale programs very quickly, and created some risk for payment integrity. Because of the urgent need to get citizens money, we needed to act really, really quickly. Some of our payment integrity solutions that might take months to set up were not feasible. So we had to be flexible and find new ways to insert controls into our process. One of our current processes that we saw a lot of success on was converting paper transactions, those checks, to digital transactions, either an ACH or a credit card payment. In 2021, we saw the numbers of transactions going out of the government reach an all-time high, but we also saw a lot of success in both reclaiming fraudulent transactions and identifying them in advance. I've included on the right of this slide an important distinction that we use in the US government, and that is the definition of what is an improper payment. This is sometimes a guiding principle for compliance exercises, but it also helps us guide in how we offer solutions. For our definition, an improper payment can be when federal funds go to the wrong recipient, a payment is issued for an incorrect amount. This could be an overpayment or an underpayment. Federal funds were used in an improper manner, or documentation was not available to support the payment being issued. Across the government, agencies need to report improper payment totals on an annual basis, as well as reporting what controls are in use and what they're doing to mitigate the risk. Each year, the programs that have the most improper payments are required to undergo assessment and come up with a review plan on how they're going to better control those improper payment totals. I mentioned this guides some of our solutions as well. We focus a lot of our effort on monetary loss. A large chunk of improper payments may be due to improper documentation. This is something that each sub-agency will need to assess on their own, not something that we can create controls for at the US government level. So we focus on controls on how to make sure fraud and payments are not going to the wrong recipient, and making sure our services that we offer align and enable the sub-agencies to identify those in advance. I'm going to turn the presentation over to Sarah now.
Thanks, Marshall. As Marshall may have introduced me in the beginning because I was having some technical difficulties, my name is Sarah Strichevich, and I am the director of the Payment Integrity Center of Excellence, which is part of the proposed Office of Payment Integrity that I'm going to talk to you about right now. We can go to the next slide, Marshall. Okay, so as Marshall may have mentioned, we have two areas or program areas of focus at the Bureau of the Fiscal Service, where the mission and vision and overall goals of those program areas are extremely similar. You have the Do Not Pay Business Center and the Payment Integrity Center of Excellence, or PICO, as we call it. Both of these program areas, the main goal is to identify, prevent, and recover improper payments. Because of that similar vision, mission, and our similar goals, it made sense to actually not only collaborate together, but integrate those two program areas together. So we have a proposed Office of Payment Integrity where we're bringing the two organizations together in order to provide seamless customer services and solutions to our federal agency program customers and federally funded state administered programs. We want to make that shift from collaboration to integration because we want to focus on providing that seamless customer experience. We want to identify opportunities where we can actually support and facilitate other program areas or government agencies communicating with one another, sharing best practices and lessons learned in order to identify and prevent more improper payments. And the more we grow and learn how to best take advantage of our respective strengths, the better we're going to get at preventing and identifying those improper payments. We want to have one vision as the Office of Payment Integrity, or OPI, and that's to be a trusted partner of every federal and state program issuing federal funds by providing actionable business insights and solutions that transform how agencies approach identification, prevention, and recovery of improper payments. What does that mean? The key term is actionable business insight. It's that term actionable. We want to be able to arm our customer agencies with knowledge and value-added data so that they can make informed decisions about their own payment processes. We want to help them by becoming experts in the field. We want to help them walk through their own payment processes to identify opportunities where we can insert or implement our services and solutions at any point in the payment life cycle in order to identify and prevent those improper payments. Our mission as OPI is to provide government-wide partnership, guidance, and comprehensive and cost-efficient payment integrity services that are easily adapted to support federal and state programs issuing federal funds in the identification, prevention, recovery, and elimination of improper payments, fraud, waste, and abuse. So we provide support, again, through the entire payment life cycle. We have noticed that when we focus on the prepayment stage, so we get to the information before the payment goes out the door, we can actually sometimes make a larger impact. One thing of note is that we do support federally funded state administered programs, which is a little bit unique. And the Do Not Pay Business Center, that's one of their main focuses, is reaching out to these federally funded state administered programs. So what do I mean by that? There are programs that are administered, in other words, dispersed by states that are funded by the federal government. We can work within that state, within that space, because the Office of Payment Integrity is part of the Bureau of the Fiscal Service that Marshall just spoke about. And we have a unique vision or mission and a unique role to serve as the federal government's wallet, so to speak. So we have insight into all of the money going out and all of the money coming in, which allows us to work with those federally funded state administered programs. You can go to the next slide, Marshall. Thank you. Oh, one more back. Okay, thank you. So I talked a little bit about the two areas that are going to make up the Office of Payment Integrity. There's a PICO, or the Payment Integrity Center of Excellence, and the Do Not Pay Business Center. Both came about by different means. The Payment Integrity Center of Excellence, or PICO, is relatively new at the Bureau of the Fiscal Service, and it came out of this, frankly, this idea that because we process all these payments, we have access to a wealth of information that we can use to support agencies in their own fight against improper payments. The Do Not Pay Business Center was set up as a unique authority and a relationship between the Office of Management and Budget and the Bureau of the Fiscal Service. And they have very unique legislative authorities. So those are authorities that are provided through legislation from Congress. But they have very unique legislative authorities that grants them access to various data sources. So you can tell that by combining these two kind of powerhouses in improper payments, we hope to make a much greater impact as the integrated Office of Payment Integrity. PICO gains its authority from the Privacy Act and applicable authorities to share data. And then Do Not Pay, again, is a mandated program through OMB that it's administered and managed by the Bureau of the Fiscal Service. You can go to the next slide. Thank you. I mentioned this before, but there are different facets of Do Not Pay, and I want to just briefly talk about the background. And Marshall, as the director of the Do Not Pay Business Center, if I miss anything or there's something you want to add some color to, just let me know. The authority for Do Not Pay was granted by the Office of Management and Budget. OMB issues guidance for the Do Not Pay program and retains program authority. So that means that anytime there is a new data source that is identified as a potential source for, again, identifying and preventing improper payments, there is a somewhat significant designation process that must be conducted to add those data sources to the Do Not Pay working system. That working system, along with Do Not Pay, create one element of a larger multi-agency government-wide Do Not Pay initiative. This working system centrally provides a variety of data matching and data analytics. So you have kind of a portal that allows you to look up information and bounce payments against multiple data sources. There are ways to conduct analytic projects and research projects which provide that value added and additional insight that an agency can use to actually improve their own processes in order to prevent additional improper payments. And there's additional support that this working system, the Do Not Pay working system, provides to agencies. And you also have the Do Not Pay Business Center. This is the piece that is managed and administered by the Bureau of the Fiscal Service. It was established to provide the framework and support structure for the entire working system. So you have the Do Not Pay Business Center, you've got the portal, you've got the working system, you've got your data analytics, all kind of under this business center. And it's authorized and governed by a piece of legislation called the Payment Integrity Information Act of 2019. Now, there are various pieces of legislation that came out prior to this act in 2019. And you can read about that if you actually just Googled like Do Not Pay Business Center. They have a great website that lists where all the legislative authorities come from and what governs how they use their data and how they gain access to these data sources. So I would encourage you to look out there and find out more information, because there's multiple there are multiple bills and pieces of legislation that have come out before the Payment Integrity Information Act of 2019. So as you can tell, based on that, there are always improvements that can be made to these pieces of legislation that come out, because as we develop our own ways of supporting a program agency or a federal agency in their fight against improper payments, we actually find ways where we can sometimes expand our authority, sometimes refine our authority, and just find better ways to allow our agencies to make those data-driven decisions. You can move to the next slide, please. So we have a pretty expansive stakeholder community within payment integrity. We actually consider the Bureau of the Fiscal Service itself, we consider ourselves a member of that stakeholder community. The reason for that is, again, as I mentioned earlier, we have access to a wealth of information and data, which we use to help make these data-driven decisions and identify improper payments. As Marshall mentioned, we work with financial institutions. We support, obviously, federal program agencies. We support federally funded state-administered programs, and we also support the law enforcement community and the Office of Inspector Generals across the multiple agencies. We may support ongoing investigations, like ongoing fraud investigations. We also support the U.S. Attorney's Office when it comes to providing expert witness, basically sometimes explaining how we can tell if it's a fraudulent Treasury check or a fraudulent payment. And we also support the audit community within the Office of Inspector General. So there are various audits that are conducted across the federal government, and we support those as well. How do we support our stakeholder community? We offer operational systems. So we have various systems that our agency customers can access to gain insight into their own payments. That is, I mentioned the Do Not Pay portal, but we also have post-payment systems that we grant access to agency users so they can have a full view of their payment throughout the payment lifecycle. We offer stakeholder engagement and partnerships. This is kind of what I like to consider a little bit of our bread and butter, because we sit down with our agency customers and we work through them from end to end to identify pain points, to identify opportunities, and to help them gain insight into their own payment processes so that we can identify a customized solution for them or a cross-government solution. And our deck will get into what I mean between those two in a little bit. We obviously we offer insight. We understand the payments business. We have a lot of knowledgeable people that have been here a long time, and that helps us it helps us build our reputation, and it helps us help our customers. Our data is crucial. If we don't have access to the data, then we can't support our customers. So having access to the data that we already have access to is obviously invaluable. Our analytics is also a huge part of it. We want to make sure that we can interpret our data, we can manage our data, we can ensure the quality of our data, and then we can help our agency customers understand what it is that we're providing to them. So when we bounce payment information up against the multiple data sources, it's not that just spitting it back to the customer and having them figure it out. It's actually helping them interpret those results so that they can apply those results going forward in order to prevent those improper payments. As I mentioned, sometimes we have those customized or customer-driven solutions. There may be a very specific issue or challenge that an agency is facing, and we work with them to identify a way to face that challenge and to minimize that challenge and to hopefully solve that challenge for them. And we also provide support with funds recovery. We actually have a recovery tool, and we'll get into some of those in a little bit, but it actually provides the agency a way to request that funds be recovered. So in the event that an ACH or direct deposit is made erroneously, and that could be for various reasons. It could be an administrative error. It could be that the account is not valid. It could be that the account was closed. It could be the wrong amount was issued. We have ways to recover those funds for agencies through our recovery tool, and we work with the financial institutions to get that money back for agencies. There are instances where that whole process may take a little bit of time. And so we have folks that are dedicated to working with our agency customers to help prioritize when funds need to be recovered. There are also instances where you may have a payment that gets kind of stuck in the process, or there's an issue and it's an emergency pull, and we have the ability to pull something, especially if it's a check, we can pull it directly from our printing floor before it goes out the door. While we developed our stakeholder community, we identified some cross-government challenges or themes. What I mean by that is that there were multiple customer agencies or federal program agencies that identified the same challenges or reasons for improper payments. One of which was payee eligibility. That means, is the person entitled to the payment? Should they be eligible for that payment? Do they meet the criteria in order to be eligible for that payment? What we found is that there are agencies that may have different rules for eligibility, but they may also have very similar rules for eligibility. And so we can help identify cross-government solutions that provide insight into that payee, and then can tell that government agency or program area that that individual is in fact entitled or eligible for the payment. The other thing we found was identity validation. Is the payee who they say they are? And that's a tough question to ask, right? So we have a lot of tools that actually help with that, some of which can provide payee account validation. So that means that the individual whose name is written on the payment is the same individual that owns the bank account that that payment is going to. That gives our customers a huge advantage, because then they know that they're paying the right customer. They're paying the person that applied for that particular benefit or that payment. We also provide some evaluations based on risk. So we'll kind of rank the matches that we get back from our multiple data sources, and we can help agencies prioritize those matches. So if something is like, okay, this person should not be paid at all, then the agency can look at that and say, okay, got it. We'll prioritize that and adjudicate that first. One thing that we want to be able to move towards, and I'll get into this a little bit, is helping agencies make those decisions as fast as possible. And one way of doing that is developing rules with that agency in order for us to make informed decisions on behalf of the agency. That's in its infancy though, and I don't want to give too much away, but we're hoping that we can move just a little bit faster so that, again, we can prevent more improper payments. You can move to the next slide. as I mentioned, we work throughout the entire payment of the life cycle. So I'm not the entire life cycle of the payment, excuse me. So I'm not going to spend a whole lot of time in this particular slide. But we can work within the pre-award and the prepayment. What's the difference between those? A pre-award may be that this is really before the agency even develops the payment file. This is when they're not even sure if the entity, business, person that wants to receive a payment is in fact, a real person or a real business. So we can provide them access to data sources that help them, make that determination. We also worked with the prepayment space, and we try to focus in the prepayment space because, again, once we have the payment information from the federal agency, we can help them make determinations before that payment goes out the door. And when we work in that prepayment space, we have as much information as we're probably going to get about that particular payment. We're not going to get any additional information from the agency at that point. So it helps us make those determinations for the agency and then ensures that we're bouncing that payment against the right data sources to get the right results back. We do have means of putting holds on payments at the time of payment. We also have means of pulling checks that have already been printed as long as they haven't gone out the door. And so while at the time of payment, we're still developing ways where we can increase our footprint here and actually make it a little bit easier for agencies to, like, let's say they hit the button and then they're like, oh, cancel, cancel. It's kind of like an undo button when you send an email and then you go, oh, I don't want to send that email. And so we're trying to find ways where we can increase our footprint there and work with agencies to develop these rules so that we can actually say, oh, you know what, you don't want to send this payment out. I know you told us to send this payment out, but you really don't because the person you're trying to pay is actually deceased. And then, of course, there's that post-payment, which mostly focuses on recovery and it focuses on returned payments and reclamations. You can go to the next slide. So I talked a lot about our focus areas kind of in piecemeal, but I wanted to just walk through what our 5 focus areas are for payment integrity. And I want you to imagine a bar going across these 5 areas that says something to the effect of like seamless customer experience. Our overarching goal for bringing our 2 organizations together for the Office of Payment Integrity is to ensure that our customers have that seamless experience from start to finish. We want to make it as efficient and effective as possible for our agency customers to work with us. That really starts with that data sharing. The reason our data sharing is a focus area is because if we don't have the legal agreements in place, we cannot share the data. We cannot gain access to the information that we need or share results back with our customer agencies. And sometimes this first step can take the longest because we have to negotiate the data sharing agreements, and we'll get into that in a little bit. We have cross-government solutions, agency-specific solutions, of course, our data analytics, and then, as mentioned, access to data, which is crucial. We move to the next slide. I'm going to try to speed things up. I know we've got quite a number of slides to get through. This is an example of a cross-government solution because sometimes that can be a little confusing. Like, how do we use a cross-government solution? And the best way to do this is what we call our cross-government data analytics. This is that conversion of check payments to direct deposit or ACH payments by using information that we already have. So for instance, when we were doing the economic impact payments for the IRS as part of the COVID relief payments or stimulus payments that went out the door, we knew that the number of payments that we had to push out in a short period of time, if we looked at what we thought was going to be the projected check volume or paper volume, it would have taken forever to get the checks out the door. Checks are more expensive. Checks actually have, they're 16 times more likely to cause a post-payment action. So we wanted to make as many payments as we could through direct deposit. We knew it would get to people faster that desperately needed it. We knew that it was safer from a security or anti-fraud standpoint. And frankly, it's cheaper. So how did we do that? we looked across our payment landscape in terms of our data. So, and we realized that the vast majority of individuals that were eligible for these stimulus or pandemic relief payments, that the IRS did not have bank accounts for, we did have bank accounts for, because they were already receiving another government payment from some other agency. So we were actually able to convert those payments from checks to ACH and get those payments out the door, because we knew that they already had received government payments electronically. Now, one thing about this particular cross-government solution and our cross-government data analytics, and the reason that we were able to do it so quickly, is that we had the legislative authority to do it. It was part of the CARES Act. It was part of the other acts that came out as part of the pandemic relief and all of the bills that Congress signed, and we had the authority to do it. We do work with agencies to identify subpopulations of payments that we can convert, but that still requires that we go through that data sharing agreement or that agreement phase, because we can't necessarily just go fishing. Like, we can't look out there and say, I'm going to convert all of your payments from check to ACH. It doesn't really work like that. We have to have the authority to do it. But by doing this, we can help the agency answer particular questions about either the payee or the account or address. So we can help them validate the account, help them validate addresses. We can help them verify that the account is open, that it can actually accept payments. And then we can, again, match the payee to the bank account owner, which is huge. We can go to the next slide. Okay, so these are some of the solutions. I mentioned the investigative solutions, which is on the far right of the slide. And this is the support that we provide to law enforcement agencies and the OIGs. I also talked about our Do Not Pay portal. That's kind of a centralized location where agencies can bounce their payments up against a multitude of data sources and then adjudicate or work through those matches in order to determine if a payment should be made to an individual. Our info apps is again access to those systems that we grant directly to our customer agencies, so they can have the whole view of their payment from start to finish. They understand exactly how many payments went out the door, how many were returned for various returned reasons. They understand what's been recovered, what hasn't been recovered, so on and so forth. So it actually gives them access to that information. One of the things that we are working on together as the Integrated Office of Payment Integrity is granting access to a data source called the Electronic Verification of Vital Events. This is provided through a third-party vendor called NAFSIS, and I don't remember what that acronym stands for. But essentially, this data source can provide a secondary authoritative source of death data. So there are other death data sources or data sources that have to do with individuals who are deceased. But what happens is that agencies, they need more than one source. They need additional information. They need proof that an individual is actually deceased so they can remove that payment from the payment cycle. They can stop that payment from going out the door. And EVE, or the Electronic Verification of Vital Events, actually provides agencies with this additional source. And it uses state data as one of their data sources. So all the states across the US are responsible for maintaining death records. And EVE gains access or provides access to these records. We also have the Account Verification Service, or AVS. And when I mentioned that cross-government data analytics, where you convert your electronic payments or your check payments to electronic, when you include AVS or the Account Verification Service, that's going to tell you whether or not you're paying the right person. That's going to tell you whether or not the account you're trying to pay is actually open. And it uses the early warning services, which is a data source that's owned by multiple financial institutions as one of its main sources of information. But it actually tells us if the bank account is valid and the person owning the bank account is the person you're intended to pay. So all of these solutions actually can give either combine them together, separate them out, but they provide all of our customers with the means that they need to prevent improper payments. I think I have one more slide after this. Okay, so we have lots of partnerships underway. This kind of just gives you a snapshot, but I wanted to highlight a couple of things. So we work, currently we're working with approximately 47 agencies across over 200 programs. We also are working with 65 federally funded state administered programs across 35 different states. The Do Not Pay portal actually has over 2,500 users for the portal. So you can imagine that we have to have structures in place and processes in place in order to forge these partnerships, encourage these partnerships, maintain these partnerships, because what can happen a lot is other priorities pop up and everybody's dealing with multiple priorities at the same time and things get put on the back burner. So we have to kind of press our customers, especially if they're prospective customers. And we have to say, oh, we're still here. We're here and ready to work whenever you are. And it takes a team of extremely dedicated and talented individuals in order to maintain all of these relationships. You'll see a list of the services and solutions on the side that I already spoke about. And I think I'm going to turn it back over to Marshall.
Great, thank you, Sarah. The next topic that we wanted to touch on that underlies a lot of these services is the sharing of information or sharing data. Wanted to give some background on the security required to function in this area. One of the first things we had to do was set up a way of taking in data and then sharing it with other agencies. This is of great concern, making sure that data that we get that represents citizen data is secure. We comply with IT security requirements at the highest level in the U.S. government. The Federal Information Security Modernization Act, or FISMA, sets out requirements for IT systems handling data at certain classification levels. Because we're handling citizen data and sometimes sensitive data related to payments to and from the government, we are considered FISMA high and must meet the highest levels of those requirements. One of the first things we had to do was get authority to operate such a system. This requires thorough testing on an annual basis. It requires a third-party outside review of the architecture and all of the systems that interact and touch the system. And it requires a dedicated framework for hosting the data and for allowing the data to come in and go out. We do leverage cloud technology for hosting a lot of these applications. However, the cloud technology we use is of a security level higher than your average commercial application. We use federal cloud that is specifically designed to meet NIST and FISMA requirements. When we were standing up the Do Not Pay portal, this took a few years to set up, to get the approval, do the IT build out, and to get the certification to operate. We also have security built in when it comes to our customers accessing our tools. Access to the Do Not Pay system can only be given after a rigorous series of sign-offs. This includes our Treasury legal counsel, program area, as well as signed attestation from a designated approver at the agency level. When you do access our systems, you do not get access to all the data. Your access is pre-configured based upon your business need. Most agencies are not aware of all of the possibilities that the system offers. They only see what they are allowed to have access to. Because of this security layer that we have, both in setting up the system and then accessing the system, we also have some more flexible options available that allow us to be more agile and flexible when dealing with a new customer. We refer to these as analytic partnerships. We can work with agencies or new customers in a very fast manner, taking their payment file or their customer data and running it through our analytic processes, returning results to them without ever actually exposing the agency to any sensitive data. We'll deliver analytic results to them, letting them know where we found potential improper payments, where we found data inconsistencies. We might return to them a risk score or a confidence score, but never actually giving them access to some of the sensitive data that we work with. Even this process, though, does require a rigorous approval, including our privacy and legal area approving the exchange and a sign off up to the director level. These are two components that we have in place to ensure security. A lot of the work that we put in order to get to the point of bringing in data and doing analytics for our customer agencies focuses around establishing an agreement that details out what we will do for them, why we have the authority to do that work, what authority they have to interact with us, and what they're going to do with the results that we give them. In these sharing agreements, you will see the following categories that I've displayed on the screen. We have the security that I just touched on, privacy concerns, administrative operational roles, if we're going to do any customized work for them, and then the legal authorities that I had mentioned. There is great concern with privacy throughout all of these interactions. We have privacy experts on our staff that deal with setting up access each time we have a new customer, and they do a determination to determine if certain privacy thresholds are reached that would require additional processes, documentation, and in some cases, public notice that a matching is going on using citizen data from one agency and another, so that citizens are well informed of how the government is using their data. We think from a payment integrity perspective, we're very aggressive. We want to do everything we can to protect government money, but we also have to work within the framework of letting citizens know what we're doing with their data and how we're using it. It's just as important. And Sarah, I'll turn the presentation over to you.
Okay, thanks, Marshall. So there are two major types of data sharing agreements that we use in order to set up the data sharing with our federal agency partners or customers, but also protect the information, as Marshall mentioned, which is crucial because we are dealing with privacy information, we're dealing with tax information, we're dealing with very, very sensitive data, all about the individual or the citizen. So we want to make sure that we're protecting that information. One data sharing agreement that the Payment Integrity Center of Excellence area deploys most frequently is the Information Sharing and Access Agreement, or we refer to it as an ISAA. Another type of agreement is a computer matching agreement. And how the type of data sharing agreement is determined is based on certain thresholds that the engagement with a federal customer may meet or may not meet. Now, we could spend forever talking about those different thresholds, but I am not an expert in that, so I kind of want to give a high-level overview. But then if anybody has any particular questions about how to meet these particular thresholds or what it means when you meet these thresholds, please don't hesitate to reach out and we'll get you in touch with our experts. A data sharing agreement is what it sets forth the terms and conditions under which the Bureau of the Fiscal Service will disclose or receive information to or from another federal, state, or third party. So it's not only that we want to make sure that we are protecting information that we receive from our customers, but we want to make sure that we're protecting information that we then disclose to our customers at their requests. So the types of agreements can set the roles and responsibilities of each party that are in the agreement. And they also include the legal authority, how the source data is being handled, what do we do in the event of a breach, how do we handle incident reporting, and how the information is actually being used. Why is this data valuable and important? Why is it worth protecting, and how is it being used? We can go to the next slide, please. So again, you have your ISAA and your CMA. An ISAA is governed by the Privacy Act and specific authorities granted to our customer agencies. This data exchange doesn't meet the definition of a matching program. So in that Computer Matching and Privacy Protection Act, or CMPPA, and I know I'm throwing a lot of acronyms at you right now, so just bear with me. That matching program is one of those criteria that I mentioned, or those thresholds that I mentioned, that if we look at a draft ISAA, it may meet the criteria for the CMA, or Computer Matching Agreement, which frankly, the Computer Matching Agreement may take longer to execute because there's more to it. It's more complex. But sometimes a computer matching agreement may actually allow the agency and us, the Bureau, use the data in more flexible ways. It just depends on how the agreement is set up. An ISAA cannot involve determining eligibility for a federal benefit program. What does that mean? So I've talked a lot about how the data that we provide to our customer agencies is invaluable in helping them determine whether or not to make a payment. But if you read that, our data sharing agreement does not grant the authority for the agency to make a determination about eligibility. Okay, so that sounds contradicting, right? What we do is that we enhance the customer agency's information. We provide additional value. It is up to the customer to use the information that we provide and their own information in order to make a determination about eligibility. The Bureau of the Fiscal Service is only paying on behalf of an agency. We are not the paying agency. Therefore, we do not have the authority to make that determination about whether or not a payment should go out the door on our own. We rely on our agencies to do that. So the agency, if we have an ISAA agreement set up with that agency, the agency may only use the information that we are providing to them to enhance the other information they already have in order to make a determination. They cannot use our information only to make that determination. The computer matching agreement is a little bit different. It actually requires a data exchange that meets the definition of a matching program. So that's why it could take longer to set up a computer matching agreement, but it actually may give your customer agency more flexibility in how they use that data because it sets up that quote unquote matching program. So it has that broader scope of usage. They can use the information to make determinations about eligibility. They can actually tell us to stop payments based on the information that they give us. But an ISAA is not that broad. So we have to be very careful and we have to be mindful of how our agencies are using the information that we provide to them. It's still very versatile though, because an ISAA is actually a lot easier to set up. So a lot of times what we may do is explain that we have a a customer may have a very unique situation. And we say, oh, we understand that situation. We have a data source perfect for you. But don't make any determinations about eligibility based on the data source. Just use that information so that you can make better decisions when you combine it with everything else that you know, paying agency as the paying authority for that particular payment. I know that's a little confusing, but again, we do have a lot of experts on our respective teams that can help sort out any particular questions you may have. There are some crucial parts of the Information Sharing and Access Agreement, or ISAA, that we walk our customers through. There's the purpose, why are we setting up this agreement? There's the data disclosure and security. So that means, how are we protecting the data when it's disclosed? How are we disclosing it to the customer? How are we setting up not necessarily the actual IT or physical transmissions or connections, but how are we protecting the information? It also kind of lays out all of the legal authorities and backgrounds, and that kind of tells the individuals that have to review these documents and then actually execute or sign them. It kind of tells them what we're basing this agreement off of. So there has to be some established legal authority to do the work that we want to do for an agency. Typically, we don't charge our customer agencies for the services or the data that we provide, but occasionally we may set up reimbursable agreements with customers. So in the data sharing agreement, we would talk about whether or not there's a reimbursable agreement where we provide the service and then the agency pays us back for it. We also talked about the responsibilities, which again is really important. So it talks about what the Bureau of the Fiscal Service is going to do, and it talks about what the federal agency program or customer is going to do. We note the duration, or how long the agreement is. Typically, our information sharing and access agreements are only set up for 1 year, which we are working towards, or trying to find ways where we can expand the duration, especially for an established program, up to 3 years. Because the amount of work that's involved in not only setting up the initial agreement, but then extending or amending an agreement, that can be actually at least one person's full-time job year-round. And so we want to find ways where we can actually extend the duration of our agreement, because we've seen success in these short-range agreements, and it makes sense to actually have them last longer. It also includes the transmission and mechanics. That's that technical implementation. How do we set up the file exchange? How do we set up the connection? What do we use to do that? And there are various ways that we provide connections to our services. It could be through an API. It could be through a secure file transfer. It just depends on what the agency is set up to do from a technical perspective. And we work with them to identify the best ways for them to receive the information. Obviously, we want to move toward automating as much as we possibly can, but we know that there are limitations in terms of IT infrastructure and capabilities. So we work within those limitations as best we can. And then, of course, we also specify the data elements. What exactly are we receiving from the agency, and what exactly are we sending back to the agency? We move to the next slide. So when you're defining the purpose, we do ask our customer agencies very specific questions, because a purpose could be, we want to prevent improper payments. Yes, that's valid, but we need more information. We want to know who the agency is. We want to know what their purpose or business process is associated with the data sharing agreement. So what is the specific program or payment that they want to provide to us in order for us to bounce it against our data sources and provide the results back? What records or services are they looking for us? Like, why are they here? What do they need from us? How can we support them? And then this is, again, crucial. How will the federal partner or customer agency use the results from fiscal service? What actions are they going to take or not take based on the information that they give us? What current opportunity are we assisting that the federal partner is achieving? So when we set up our data sharing agreements for things like the COVID relief and the pandemic relief, obviously we knew right away that we were assisting the federal agency with pushing out payments as fast as possible while minimizing fraud and improper payments as much as possible. So we were able to not only convert those payments from paper to electronic, but also apply things like our account verification service, or AVS, to mitigate or decrease the amount of fraud and increase the number of proper payments that we were sending out. We can go to the next slide. Okay. So that ISAA, or that agreement that I'm talking about, it is granted its authority through the Privacy Act. So that is what permits the federal entity to collect information. The Privacy Act, it does prohibit the disclosure of a record about an individual from a system of record absent the written consent of the individual. That's a mouthful. Again, I am not the expert in how the Privacy Act is structured and the very specific pieces of the Privacy Act. But what it does tell us is it tells us the what, the why, the who, and the where. And that kind of corresponds with all of the questions that we ask our customer agencies when we're setting up these data sharing agreements. We want to know what information is being collected. We want to know why it's being collected. We want to make sure that we understand who is disclosing information, and we want to know where the information is coming from. And this is all in order to protect that highly sensitive information that we are dealing with every single day. We know that we need to protect that information. We know that it's crucial that we protect that information. And we know that we need to make sure that we are protecting that information from start to finish throughout the entire process. And looking at the Privacy Act and following the Privacy Act when we set up these data sharing agreements allows us to do that. Next slide, please. So as we set up these data sharing agreements, we have to rely on our expert attorneys to review these agreements through every step of the way. And so we have areas or issues that may come up when our expert attorneys or our Office of Chief Counsel are reviewing these data sharing agreements. And these are sort of universal. These are common issues that come up when they're reviewing these agreements. There could be questions about the purpose of the agreement. What is the federal agency going to do with the information we're providing? Why do we, the Bureau, why do we need to know the information? Why do we need to get information from the agency? And what's the result of this data sharing? What happens after we receive information from the customer agency? And then how do we send it back? There may also be questions around the responsibilities and the roles of each party. How are we making sure that the data that we're exchanging is protected? So how is that data exchange taking place? Who's responsible for maintaining that data exchange and ensuring that it does stay secure? What's the frequency of the transmission? How often does the agency get information from us and vice versa? And then are there accompanying agreements that need to take place in order to maintain that connection? So we may have memorandums of understanding or MOUs that we set up with our customer agencies that talk specifically about ensuring that those connections, those physical, infrastructure IT connections are maintained and protected. There could be issues or questions around the legal authorities or the background. Are we actually allowed to share this data? Where is the authority coming from? How do we know that we have the authority to share this information? What are those governing authorities that grant us permission to do what we're trying to do? And it's really important to note those in the data sharing agreements because it kind of helps us, realize that there's a precedence, right? There's a reason why we're doing this. There's a reason why we can continue to do this and we're not circumventing any of our existing authorities. And then, of course, we talked about the terms of the agreement. Sometimes we get questions around whether or not the agreement needs to be as long as it is or as short as it is. Sometimes we talk about how many amendments or extensions we anticipate with this agreement and how we're going to negotiate any additional terms, especially when we have a reimbursable agreement set up with an agency where they're paying us back for a particular cost of the service. We can go to the next slide. Okay, so we want to make sure that we are walking our customer agencies through this somewhat rigorous and cumbersome process. It can take a very long time to set up these data sharing agreements. So we've put some things into place where we actually have a business process and something that we call a business requirements form, where we're kind of walking the customer agency through how to answer all of those questions I just talked about, because we know we're going to be asked those questions by our legal experts and our privacy experts. So we want to get ahead of the game. We want to get ahead of that process, and we want to ask the customer up front, okay, tell us why you want to do this. Tell us how you're going to use the information. What do you expect to accomplish from this, et cetera, et cetera. So we have a process within our team, and we hope to identify ways where we can learn from the process that we have in place within the Payment Integrity Center of Excellence area, and then apply it to Do Not Pay and vice versa. So that comes about, that's that integration that we keep talking about with the Office of Payment Integrity. We're two established programs forming into one. So we know that there are ways where we can learn from each other and build our processes based on what we've learned from one another and what we can gain from one another. But this process you'll see here is very specific to how PICO kind of sets up these data sharing agreements with our customer agencies. So we have our outreach analysts and experts walk our agencies through the process. We have tools like the business requirements form that kind of walk the agency through all of those sections and ask very, very specific questions, so that when our privacy expert is actually drafting the data sharing agreement, we have all the information that we need based on those conversations with the customer agency. The data sharing agreement goes through quite a bit of review process, and then once we set up the actual technical connection and we implement the solution, that's when, and then we go through a couple of iterations, do any troubleshooting that we need to do, that's when we've actually operationalized this solution. We have made it available for our agencies. It becomes part of their standard process, and they're getting benefit out of that. But how do we know that we're getting that our agency customers are getting benefits? We have to follow up. We have to conduct customer feedback or feedback loop sessions. We have to encourage the agencies to tell us how they're using the data. Hey, what did you do with that information that we sent you? What did you do with that account verification service results file that we sent you? Did you still pay people even though we told you guys that the account was invalid? Because there are instances where accounts are still paid, payments are still made, even though we're looking at it thinking, well, that doesn't seem like a proper payment. But explain to us, what do you have? What do you, customer agency, have within your own arsenal that informs you about the payment? And we learn from those feedback loop sessions so that we can improve our own solutions, and we may actually identify additional pain points or even eligibility criteria or requirements that the agency needs access to. And then we can look for data sources if we don't already have them, but we can look for specific data sources and identify those for agencies and say, oh, so you need to know about income related information. You need to know about employment eligibility information. I think we got a data source for you. We can help you access that information. So we're constantly learning as we move and work with all of our customers. We can go to the next slide. And I think I'm turning it back over to you, Marshall.
Yes, and I see that we are a few minutes over. I'm going to summarize the next 3 slides in just 2 slides, but there's some key points I do want to quickly get to. Sarah had mentioned a lot of great concepts that we have put into motion, and I'd like to point those out in some use cases. On this slide, we mentioned 3 very important services and concepts that we have put into motion. Cross-government data analytics. When you're looking at payment integrity, take advantage of the data that you have. Treasury is able to sit and issue payments for the whole US government, so we can arm one agency with more data, knowing what the other agencies are doing. We put that into use, and in recent years, we've identified almost $70 million by looking across the government, across business lines, and using data collectively. We implemented that account verification service that Sarah mentioned. And this is going directly to banks and partnering with banks to say, yes, Marshall Henry is the account owner, rather than trusting the individual making the claim for payment. This is going to the source of the account, removing some of those barriers. letting private industry help us. And then the third example is the electronic verification of vital events, EVE. Getting notification of death is a big reason that we can stop payments. We partnered with this public organization to go directly to states as deaths are being reported, rather than having to trickle through the normal process that could take days or weeks before a death is reported to the government. Getting very quick notice, going to the source of the information are very important themes for payment integrity, so that we can act in a prepayment manner rather than reacting after a payment has been made improperly. Oh, sorry, I did not shift my slide there. I just realized that. There are 3 other areas that I wanted to point out because of the importance of the theme. We're evolving our services to be faster. If you go back to the very beginning of the presentation, we talked about how payments are constantly going faster. We need to evolve our payment integrity services as well. We're offering our services through an API, and that stands for Application Program Interface. When our payment integrity efforts first started, we offered a web portal where a citizen or an agency could log in, check a payment before they issue it. We've realized that as speed is evolving, we need to actually have system-to-system connections, and behind the scenes, they can use this API to check an application or an applicant in real time, rather than having to log into a system. Sarah mentioned our partnerships with states, again, going to the source that has the most data, and also offering analytic services. While we do have a focus on prepayment, looking retrospectively at our programs, assessing what they did last year is also a great source of learning, of knowledge, and helping us set a priority of where we need to offer new tools. And Sarah, I believe we have 2 more slides to talk about the future direction, and we can wrap up and answer questions.
Okay. So some of these I've already kind of talked about, and again, when you go through these slide decks again, and you look at those 5 focus areas I talked about, remember that bar across the top where it talked about that seamless customer experience. A lot of these emerging initiatives have that theme or that goal in mind. We want to be able to streamline our data sharing agreements. We know how cumbersome or how difficult this step and challenging this step can be. We want to expand the use of our AVS or account verification service because we have seen so much success with it, and expand our other capabilities. But in order to expand these capabilities, we have to find ways to streamline our data sharing agreements. We have to find ways to streamline that process and to increase or, shorten the time from conception or idea to market, right? To operations. We have to shorten that timeline. We want to be able to find ways to expand our authorities. We want to implement the full death master file. This is a data source that's provided by the Social Security Administration that we currently do not have access to, but we want to gain access to it. We will have access to it at the end of calendar year 2023, but we want to make sure that we can maintain access to that data source. We want to continue to add additional data sources. We want to find ways to do faster payments by actually reducing the lead time that agencies give us to produce payment files and check files. By reducing that lead time, we actually allow the agencies more time to do the checks that they need to do in that prepayment space in order to identify additional improper payments. We have ideas like a centralized payee register or central payee register, CPR. What does this mean? This is like a list of people that are good to go. They're good to pay. Like, these are the people that are fine. These are the people we've already vetted. These are the people that need these payments on a regular basis. They're getting recurring benefit payments. They don't need to necessarily go through all of the checks unless something changes on their side, like a new account setup or something like that. And we want to make sure that the bank account is valid. We also want to develop ways where we have a centralized hub or eligibility rules engine. This would allow an agency to actually come to us knowing that somebody, like an individual, says, I want this benefit or I need this benefit. An agency can come to us and see if they check all the boxes that they're eligible for that payment. That's something that we're developing in the future, but we want to be able to provide that centralized location for all agencies to come and say, okay, Office of Payment Integrity, tell us if this payment is good. Tell us if this person is eligible or entitled to this payment. And then, of course, for our investigative support, we have ideas around implementing machine learning, which is a technique or facet of artificial intelligence, which would allow us to actually identify checks that have been altered. So we can do it faster and then support ongoing investigations regarding fraud, because we have the ability to actually automatically or systematically identify fraudulent payments. And we don't have a human going check image by check image by check image to identify those alterations. And then, of course, our fraud network link analysis. This is our connected cases. This is how we look for patterns. And we look for patterns based on geospatial data. We look for patterns based on, you know, if it's the same payee getting the same payment over and over and over and over again. And so we want to expand our ability to provide these proactive fraud detection services to our investigative support community. I think we've got one more slide. And it's our contact information. So as Marshall and I both said, if there are any questions, if there are any concerns, if you're like, hey, I didn't catch this part, can you go over it again? Our contact information is right there. And I would encourage you to reach out to us at any time. Thank you so much for inviting us to this. What a wonderful experience. And I don't know if we have any time for questions or if we're backed up against the next presentation, but thank you again for your time today.
Yeah, thanks a lot, Sarah. Thanks, Marshall. We have some time. We have 20 minutes left to, you know, from some Q&A session with that. Thank you very much. It was a real lecture for us, to our model. Thank you. Pessoal, agora sigo em português. A gente tem mais 20 minutos para algumas perguntas. Quero agradecer a todos os painelistas que
Thank all the
falaram.
panelists that spoke with us. I just wanted to make clear that we are here in an auditorium that has people from the TCU, which is the equivalent to DAO in the United States, and also have public managers, federal public managers that got inspired in the American model, which is definitely different from our model in several points of perspective. We have the challenge here to address a question to each one of you that lectured. I would like to for you to ask you, the panelists, to answer in only 3 minutes, so we can respect the time, so you can also so that you can also make your final considerations after these 3 minutes. Thank you very much for all that you offered us in your content. And so now I follow with Barry in English because of the technical issues. Barry, can you hear?
Yes, I can. Yes, I can hear you, Wesley.
Thank you. I have a question for you.
Yes.
If you please ask me in 3 minutes maximum, because we're running out of time, okay? Now, you said the risk assessments it has been made in every 3 years in order to help estimate improper payments in GAO. Well, I've said as well that root causes and corrective action plans are very necessary to mitigate this kind of risks. And this job has been done since '97. My question is kind of a philosophical question, because we just faced the COVID-19 pandemics in this past 2 years. And I just imagine how bad would be these kind of improper payments in your government and in the government of Brazil if we do not have some controls and frameworks that have been developed since '97. How bad would be this kind of improper payments, in your opinion, if we do not have the maturity GAO represents and U.S. government represents in trying to prevent improper payments?
Wesley, just to clarify, make sure I understand your question. You're suggesting
Wesley,
that
just to
I tell you
Wesley, para
what
poder
my
entender melhor a tua
assessment would be
pergunta,
of a Brazil, in Brazil, the country of Brazil, what challenges you might face. Is that correct? Or did you want me to talk about the US's challenges?
No, not at all. I'm just wondering if you have an opinion, considering the fact that COVID-19, we had a lot of challenges in proper payment. What if you in US did not this evolution, this maturity in evaluating proper payment since '97? How bad would it be?
Well, I think having some of these legislative solutions in place, having the Office of Management and Budget Guidance in place, having those helped us in the pandemic, but it was primarily for existing programs. So let me give you an example of unemployment insurance. There were 4 new unemployment insurance programs that were established during the pandemic. Now, for the existing programs, we already had some of those controls in place, and actually improper payments went up. I think it was over $70 billion that went up in 1 year. But the fact that we had so many new programs that had not had the risk assessment, because the government did not automatically make these programs susceptible. They didn't automatically say, the law is you have to estimate improper payments. If they had done that, maybe agencies would have developed those estimates, would have then gone to the next step of determining what the root causes were and corrective action plans. But remember, everybody was trying to do a very good job here. Money was being pushed out as quickly as we could get it out the door, trying to help everybody that we could help. But to answer your question, having some of those controls in place absolutely was beneficial, but there were so many programs it was limited, and I would assume for every country that situation would be very similar.
That's great. Thanks a lot for your answer. Absolutely great. Rebecca, are you here, Rebecca?
I'm here.
Yeah. Rebecca, fiquei encantado com
Rebecca, was very enchanted with your work, the one you presented with the website that was designed with ontologies, the fraud ontologies, which is very good to map the knowledge of this phenomenon. What I would like to know from you is whether there is a statistics of the website data consumption, how many people are accessing, and what is the role of the innovation lab in the construction and maintaining of these products that are in this website. I'm very curious to know what are in the investing on human resources that from GAO to actually achieve the implementation of this website in such a way that it is right now.
Thank you for that question, Wesley. Sorry, I'm going to make sure I turn this down. So you asked first about the metrics, and we do track those metrics, and we get them. Initially, we were looking at them weekly, and now we look at them monthly. And every time we do a presentation, we get a little uptick in the use. So hopefully we'll see an uptick with this. But one of the things that we see is that we have some engagement from the international community, but of course, most of the engagement comes from the US. I'd say we have, on a monthly basis, maybe about a couple hundred visitors. And again, it goes up and down. I will say most of the time that people spend when they're on the website, they'll be on the anti-fraud resources page. So they will be engaging with the resources, looking for the case studies and some of the guidance documents that we have there. As far as the resources that it took to develop this and to continue to keep it up to date, we manage things by engagement codes. So we do have an engagement code that is specific to this particular product, and we meet periodically to do updates. The ontology is ever evolving, so that happens. I would say it's not a huge investment, and also it involves the original team. So they're working on a new engagement that's focused on measurement and incentives for fraud prevention and detection. So it's aligned. And then as part of their ancillary responsibilities, they will update some of the resources. They're continuing to update the ontology. But then also, one of the other ways that we've found that is very helpful to continue to update the ontology in the cases is every time we do an audit, we are using Web Protege to enter cases on whatever topic it is. We've got a host of cases on the SBA programs, the unemployment programs, and other programs. We'll enter that into a Web Protege in the ontology, and then that will be available to upload into the website. So we can continue to refresh on that as we go along. So it's part of our normal audit process.
Yeah, thanks a lot. Thank you. Pergunta, estou seguindo rápido aqui para a gente conseguir cumprir o tempo e falar com todos. A pergunta para o Andrew.
I am trying to go quickly here. I'm going to make a question to Andrew. Andrews, I was very curious about your simulation tool. It's clear that we didn't have the time to go in depth in this tool, but I'm very curious to know the functioning mode in the GAO, how the people from the innovation lab that attend to the finalistic areas from GAO and specifically, so we can build this simulation tool. How is the influence and the importance of the GAO reports, the previous GAO reports, and the data obtained from the structural system from the American government? So my question is, how much do you rely on to build the simulation tool? How much do you rely on the information from the public information of the American government and the information from the reports from the GAO? Do you know?
Leslie, I apologize. I don't have my connection to the other line anymore. And would you be able to translate that question for me?
You did not understand my Portuguese, I think. So
my Portuguese just isn't there. I'm very sorry.
No problem at all. No, my question is how big is the influence of the GAO reports and data originated from structured systems in the U.S. government to build this simulation tool? How can we? I would like to know a little bit more about what are the inputs of the simulation tools? GAO reports and some information about some public policies, or another one? That was
yeah, fantastic question. So it all began with an interview of national experts. We brought together a panel of every subject matter expert we could identify in private industry, in nonprofit, and in the government. And we held 7 facilitated sessions over the course of 3 days, in which we asked a number of questions to these experts, which formed the basis for general assumptions that we included in the simulator. So our goal was not to pick on any particular federal program, but rather to capture concepts that would be representative of a typical federal program. The input controls, so for example, bank account verification or biometric scanning, the costs associated with those were based on averages that the experts told us, and obviously implementation could be more effective or less effective in a given program. So we took these very stylized data points. Again, the purpose here is to give insight into the guidance, not to let you simulate your own program, right? And then you make choices. What is the rate of fraud or misrepresented identity that you want for the simulator? And there's simply a dial. You slide and change that. And that's because that number will vary and may even not be null. So it's stylized simulator, you choose it. And other assumptions, like the socioeconomic status of applicants, you also choose. Those are actually statistical distributions. So when you choose one of those, like, for example, a higher rate of socioeconomic vulnerability, the simulations averages recenter, and then each of the 1,000 applicants is redrawn from the statistical distributions that you've chosen and some other assumptions that are discussed in the technical white paper, which is on the simulator's website. If you're familiar with the technical terminology, a Monte Carlo simulation is run, which generates a distribution from the statistical choices you've made. And then those 1,000 applicants, which are different each time the simulator is run, are exposed to the program's controls. So it is a representative teaching tool based on what experts have told us. It in no way represents the real world well enough for you to simply simulate your own program.
Yeah, great. Thank you for answering.
My
Okay, the last questions. I don't know if Sarah and you hear me? Sarah and
I hear you.
yeah. Do you have another link? I'll follow in português. Ok, a última questão, a gente finalizar.
Last question, so we can finalize our panel in this morning. I start with some consideration. The forcing model by the US people to aggregate the payment is something that we do not have in Brazil, to integrate this payment. So one of the most important messages is that it's important to have a legislative authority to make it work, to make a payment integrity center of excellence as it was presented to us. So my question is, as in Brazil we are very distant from your reality, but I imagine that up until today there are still difficulties in technical orders or regulatory order or cultural order. So in your perspective, what's the biggest challenge you have now in this moment with the maturity you have? What is the priority in these services for you? What's necessary to prioritize so the process can go forwards and that the results can be still more impressive than what you already have? What are the next steps of evolution of the integrative payment process?
I'm just going to repeat as I understand the question, and then you can correct me. But you talked about how currently, as I understand it, Brazil does not have the view of the entire payment universe that the Bureau of the Fiscal Service does, because we are a centralized dispersing office and we send out these payments or make these payments on behalf of the agencies. But right now, Brazil is set up to not have that kind of overview. And given the fact of how mature our program is, or our respective programs both do not pay and the Payment Integrity Center of Excellence, your question was around what we see as some of our greatest challenges with providing these services and solutions to our customer agencies in order to identify and prevent improper payments from now till the end of time. Did I summarize that?
Yeah, the next step. What's the next?
Okay, the next step.
Yeah.
Okay. So as I see, some of our greatest challenges are also where we're focused on the future, if that makes sense. So some of our greatest challenges revolve around things that I think are challenges across the entire U.S. government, one of them being resources in general. There are budget crunches, as I'll call them, which basically means that our budgets have gotten smaller, but the demand has increased, right? So we're facing a larger problem because our payment volume increased as a result of the pandemic. And when you had an increase in payment volume, you also had a corresponding increase in the post-payment actions and everything that happens after the fact. But in light of that increase in workload, our staff hasn't increased, our budget hasn't increased. So what do? We look for ways to improve our processes from start to finish so that we can continue to provide the services and solutions to our customers within that constrained or strained environment. And so when you go back through our slide deck, you'll see some things around our emerging initiatives, and one of them being like streamlining data sharing. Data sharing continues to be one of our challenges because we have to work within the confines of our current legal authorities while still encouraging our customer agencies to establish the agreements with us, to maintain the agreements with us, and allowing them access to the information we already know to be valuable. But setting up those data sharing agreements are really challenging. So we want to find ways to streamline that process from start to finish. And it could be deploying things like our business requirements form, where we actually hold the customer's hand through the whole process. And we help them answer the questions that need to be answered in order to fill out the agreement. It could also be through, as we combine Do Not Pay and PICO, we look for ways where there could be opportunities where we could possibly gain, access or do additional things by utilizing each other's authorities. And we're really starting to explore that and research that, because the authorities that are granted to the Treasury Working System and the Do Not Pay Business Center are very unique to Do Not Pay. But there's opportunity there. Perhaps it's, let's say, Do Not Pay doesn't necessarily have to have a data sharing agreement with every single agency, because Do Not Pay is a mandated program. So agencies are required to use Do Not Pay to check their payments against their sources. Well, PICO has sources that Do Not Pay doesn't have, and vice versa. So PICO and Do Not Pay can work together in order to provide the agency all of the information that they need in order to continue to identify and prevent improper payments. And we're looking for ways to do that, again, within our current legal authorities. But we're also looking for ways to expand our legal authorities. We understand what our current legal authorities are. We know that they can be better. We know they can. They can be broader, but while still protecting very sensitive information, that's still going to be a priority. But there could be ways where we can expand our legal authorities. We could expand access to data sources. We could actually find ways to encourage, or rather even mandate, federal agencies to use our services, like account verification service. And this is still all within kind of the infancy stage, where we're still researching what it would take to actually do that. And while we're researching all of this and identifying ways to address those challenges, we're still doing, honestly, our day jobs. So we're still developing new agreements. We're still reaching out to new customers. We're still maintaining our current customer relationships. So I would say that right now, our current challenges, or our biggest challenges, are working within the confines of our existing sort of resource and budget landscape. And then noting that while that landscape can be restrictive, we still have to find ways to improve our processes overall and provide that value add to our customers. So things that we're doing, like all of these research, the whole point of that is to say, okay, look, if we have an opportunity to increase our legal authorities, we also know that by expanding our legal authorities, by mandating things like AVS, if we decide to do something like that, it's going to take resources. So we have to kind of build that in to all of the research and the conversations that we are just starting now. And we have to make sure that our assumptions going in to developing these ways to address these challenges, we have to make sure that our assumptions are clearly made and documented and stated. And I look forward to everything that the Office of Payment Integrity can do, because there is an enormous amount of opportunity that we're just scratching the surface of. So I hope I answered your question. I don't know, Marshall, if you wanted to add anything.
No, I think you covered it nicely. The only other thing I can think of to mention would be we're constantly facing a faster and faster fraud attack. Our processes are not always adapting as fast as the fraudster.
Yeah, it was a great answer. Thank you very much, Sarah and Marshall. So, 12h28, estamos próximos ao fim deste
We are near to the end, so I would like one time more to thank for all of you for your time, to thank Baron Davis and Rebecca Shee, Andrew Kurtman, and Sarah and Marshall. Thank you very much in name of the TCU from Brazil for the class we got this morning. We saw some of the American reality, the models of controls in relationship with the auditioners are very different from us, and I would like to invite those who are here in the afternoon so we can discuss something of the Brazilian model, some of our activities that we have been doing in the public administration in Brazil so we can mitigate and diminish the chance of the improper payments and benefits, social benefits. So for those who are accompanying us in the afternoon or have been here too, I would like to thank you for your presence, and I invite you to come back at 2:30 in the afternoon. Thank you very much. Have a great